Hi, my name is James Murphy. I'm a consultant for Harbor Results, and I'm going to walk you through the most recent outputs around the CNC controls market study. Some of the basic things I'm going to cover today, brief overview. I'll talk about who responded to this survey and what are some other industry data trends that we see within the tool and die industry. Top purchasing drivers of CNC controls and machines. We'll look at four key brands in the industry and talk about how companies that use these brands rate them. And then we'll kind of wrap up with what other trends are we seeing within the industry moving forward here in 2016. So just a quick background or purpose statement. We've been doing some ongoing research within the tooling industry as it relates to the machinery and technology used. Last year, we conducted a survey which collected machine data, so which machines people are using, whether it's 3, 4, 5 axis, different EDM type of technologies, and what manufacturers were those. This time we looked at what controls are on those machines. And then here in the summer of 2016, we'll start to look at what CAM systems are we seeing on the machine, just to kind of give us a very good overview of what people are using as far as technology goes within the tooling industry. So real quick, the key takeaways that I'll walk you through here, Fanuc and Heinlein control a pretty large share of the North American CNC controls market, and this probably shouldn't come as a surprise. About 52% of the market share is owned by these two brands. They did score pretty high across the board on various categories and different criteria, and I'll go through that one by one here later in the presentation. And then something that kind of jumped out to us, a little more surprising, at 36% captive machines or machine manufacturers who specifically spec in their own control software. That's a pretty significant amount of machines here in the market. We'll walk through that. We'll walk through how folks scored different brands. Just really briefly, Fanuc and Heinlein scored pretty high as far as technology, capability, the flexibility piece. They do come in on a little more on the high price side. Haas, however, they have a different approach. They're less expensive. They're easier to use. We got a lot of commentary that folks find that they're easy to implement. And then lastly, we'll talk about the different dynamics here in this survey between mold and die shops. They react differently to technology, and we'll kind of talk about why and what we believe is driving that. So this is the breakdown of folks who responded to the most recent survey. Globally, it was 90 respondents. You can see the majority of them were in the US, 21% in Canada, and the rest in Asia and Europe. Shop type, we do have a 76 to 22 mold die split. The 2% other, that's where we start getting primarily around automation-focused companies. For the remainder of this presentation, I'm going to focus primarily on the North American market. Looking who received and responded to this survey here in North America, you can see we do have a heavy concentration within Michigan and Ontario, primarily in the Windsor area. Darker red means high concentration, and then darker green means a lower concentration. If you're a Harbor IQ member, you'll find in the appendix a layout of tool and die companies throughout the US. What we'll find is that this is fairly representative of the overall market as well. Now, looking at how large some of these companies are as far as revenue goes on an annualized basis, I tried to create buckets here that allowed me to create some trends and assumptions evenly. So We don't typically see a lot of companies over 40 million, but what I try to do is create equal sized buckets here. And we would see more companies in that $5 to $10 million range on average, but I did kind of break them down evenly across the board. And there are, as expected, some companies that don't share their revenue with us. If we look at how large these companies are, die shops on average and median are a little bigger than the mold shops who responded to this survey. And why you're seeing a discrepancy between average and median is that the folks who responded to this survey were typically larger. Now, here's a breakdown of the controls market here in North America. You can see machine manufacturers or captive machines is almost at 40%, Fanuc and Heinlein, Mitsubishi, and then we have Siemens kind of rounding out the board. Another way of looking at this is let's look at third-party control software versus machine manufacturers. Now we'll take a look at brand penetration rate, and what that means is we're looking at what percent of shops own at least one of these specified brands. So for example, Fanuc here on the left is saying, hey, we're in 83% of the shops who responded to the survey in North America, Heidenhain 55%, and then down through Siemens here at 12%. And why this is important is, let's say, for example, Mitsubishi at 42% brand penetration rate, we want to know the scope of their involvement within the industry. So what we want to tease out here is, let's say you have a 4 or 5 shops who exclusively use Mitsubishi controls. Well, that would mean that their brand penetration rate would probably be closer to 5%, but that would boost their overall market share. So market share is kind of, it's taking the total sum of the machines and then counting which control system is on it. Now, a different way to look at this is a scatter here to kind of bring in 3 variables. On the y-axis, we've got the brand penetration rate, which I walked through in the previous slide. On the x-axis, this is the average amount owned. So, for example, if we look at Okuma there, here in the middle, we'll find that folks who have Okuma CNC controls typically have 4 of them in-house. Fanuc is just north of 6, and Heidenhain is around 6. And then the bubble size, that's indicative of the market share. So you start to see kind of pick up as you go towards the right. We're looking to see how many of these controls exist in these shops, and then how many shops do they exist in. Now, I realize there's a lot going on in this slide, but I wanted to give folks the ability to see where's this data coming from. We have a shop type breakdown on the left-hand side, followed by revenue range, and then Canada and US. So just looking at shop type here on the top, we'll find that Fanuc does lead the way at 399 machines, followed by other or captive shops, and then it scales down from there. And then revenue range here, you can see kind of, what do people prefer by how large their facility is. And on the bottom, Canada and US. The key thing to take away from that bottom one is that US seems to prefer Fanuc, while Canadians seem to prefer Heidenhain. Now, we wanted to understand, is there a preferred controls brand within facilities? And what we found was not really. If we look at the number of brands per shop, 35% of respondents said, I've got at least 3 controls brands in-house. 24% said I had 4 brands in-house. I didn't expect this to be normally distributed like this, and what this is indicating to me is there's not necessarily any clear control strategy in tool shops. We tend to see a little more strategy around the type of machines folks use, whether that's DMG or Makino or Okuma, you name it. Folks do tend to have their preferences there. They also have their controls preferences, but you could see it as a little scattered. Now, the question we asked here was, please describe your process for identifying what equipment or machines your facility needs and how many. And this was an open response question. So what I did here is I read through all the responses and I looked for key trends and then I bucketed them accordingly. The one that really popped out was folks analyze their bottlenecks. If we were to focus specifically within machining, which is where the majority of the time is spent on a tool, they want to figure out where can I alleviate bottlenecks, whether that's EDM, whether that's different sort of CNC. They want to know how can I reduce the cycle time of my tool throughout the process and where can I shift the bottleneck. Lead time and forecasted demand. So what I start to see a little bit more of now, given some of the compressed lead times that you see no matter what industry you look at, is customers are saying, I want my tool yesterday, right? So folks are trying to figure out what can I do to reduce the cycle time to get my tool through design, through tool making, and out the door in the fast amount of time. So that is a big category there, and you can kind of see it trails off. Um, New technology, capability, reliability, those are some of the things that we start to see there in the middle, and then it kind of scales down. So the question we asked to kind of gauge how folks choose specific machine manufacturers, we gave them a list and said, choose your top 3 criteria for choosing a specific machine manufacturer. And what came back was 67% of respondents said service from supplier is one of my top criteria when selecting a machine manufacturer. Not necessarily surprising. Folks, when they go to spend upwards of 6 figures on a machine, they want the thing running, giving them a return on investment. Reliability, speed of machine, size machine, and then you can see where CNC control falls in here. So a third of folks are saying, hey, when I evaluate which machine manufacturer I want to go with, I want to make sure it's got the control system on it that my folks are familiar with. Some folks say, hey, I'm really adamant about that. I won't use anything but Control X. And then most are focused on what do I need this machine for, right? So it's figuring out what job that they want to use it for, whether it's gun drilling or wire EDMing. I'm going to buy it mostly based on need, and then the rest of the stuff is secondary. Now we did the same question trying to figure out how do you select a specific controls manufacturer, and you'll see that there's a little less, ambiguity around this. Capability, familiarity, and ease of use jump out real quickly here. So familiarity, what that is that's installed base. So I want to stick with the controls that I'm familiar with. I don't necessarily want to have to train people on different systems. I want them to be easy to use, and I want them to be able to do whatever I need them to do. Now, here is a quick summary of some of the brand experiences that I've brought together, just kind of reading through everyone's responses. Fanuc said, hey, I like the service. Their technology may be falling behind. A few people did say that. Some people said the opposite. A lot of folks said it's very customizable. However, you kind of have to pay a la carte to do that, and it's versatile. Heidenhain, it kind of came back a lot of positivity. There was kind of hard to find any sort of negativity with the brand, but people were saying, hey, it's very efficient, it's reliable. However, it is expensive, and that's to be expected. Haas, this is kind of a low capability software, but they're dominating within that 3-axis market. It's a value purchase, it's user friendly, it's easy to get up to speed on. The learning curve is not as much as the others. Siemens, people came back and said, hey, it's a pretty complex software. It's got a large learning curve. However, it's a pretty powerful tool, though the learning curve there is a little steeper. Now here we've got a little bit of scoring going on. So what I ask folks to do is please rate each of the following controls manufacturers based on the following criteria: capability, value, ease of use, service, flexibility, and price. So just so folks know, capability is, does the controller do what I want it to do? Flexibility is, can it do what I want it to do in the situation that I need? You can see what overall companies scored on the far right. Then we can go through. So green is anything above 3.5, white is anything between 3.49 and 3, and red is anything below 3. And what that means is if a company scored a 3, you would say the sentiment for that specific criteria is generally neutral. Anything above a 3.5, we would say it's positive. Anything below a 3, we would say there's mostly a negative view associated with that brand. And then the blue circles, are the low score within that specific criteria. Heidenhain did score the highest overall at 3.63, Fanuc at 3.55, and then Haas at 3.53, and then Siemens just above 3. You can see what do people prefer by criteria here and how overall different brands scored. Now, something folks try to keep in mind is, okay, what controller do I need based off of what things am I focused on? And we try to figure out what are controllers known for, right? So what I've taken is the previous table you saw on the slide that we just passed, I've now put that onto a radar chart to understand what are the strengths and weaknesses of these different controls manufacturers represented visually. So Heidenhain, you can kind of follow on the right-hand side. They do pretty well in capability and flexibility and value. People are saying, hey, that's a lot going on there. It is pricey, but I do get a lot of my return. Fanuc is a pretty well-rounded brand, so you can see in the blue line on the right. It doesn't necessarily peak anywhere outside of its competitors, but it is a well-rounded software. Haas, you can see that their strategy is cost competitive. A spike on price means that it's cheaper. That's a good thing. Service ease of use. So they have put a lot of emphasis on their service network, and that does appear to have an influence on people's scoring. And then Siemens in the black here, you can see that they are trying to focus on capability and flexibility as well. Now let's look at some additional tooling trends. We wanted to understand why people decided to buy equipment recently. On the left here on the line chart, replacement and upgrade, you can see that's kind of flat by revenue range here along the x-axis. Capacity, you can see that the larger the company, the more they're focused on purchasing equipment to be able to produce more. And then capability, we do see that kind of scale a little bit as the company does get larger. On likelihood to purchase various types of machines, I pulled some information from last summer's survey. CNC automation, folks were saying about a little over 60% were saying, hey, I am interested in getting some more automation within my facility. Within the shops I've been in recently, you see that a lot around automating the electrode cutting area, whether that's using RFID or various technologies to be able to grab the carbon block, CNC mill it, and then put it back into at least some sort of storage container for use. 5-axis, just shy of 60% of the market said I'm at least likely to purchase a new 5-axis machine here recently. So we also looked at the same question. If your facility is planning to purchase a new machine, what business objectives are driving this decision? A lot of folks said replacement or upgrade, and that's something we expected. Between mold and die, there's not a whole lot of difference. You do see mold shops generally purchasing more machines than die shops, and that's something that we've seen over the last several years. And then purchasing reasons by country, we do see quite the discrepancy between US shops and Canadian tooling shops. We'll kind of get down into like why that is. We could say that some of the exchange rate is driving that. They are pretty successful right now. Some of the various OEM strategies around consolidation into a preferred supplier base is having an impact, and they are a little more profitable right now. Now, if we look at which shops are planning to be utilized more between Canada and the US, Canadian shops, not necessarily surprisingly, are saying we're going to be busier throughout 2016. US shops did have quite the dip between the end of 2015 and the early part of 2016, but they have rebounded. Um, but, kind of looking at the end of the year, both countries are a little pessimistic moving forward. One of the main drivers that I briefly hinted at around the Canadian US dollar dynamic is that the US dollar is strong right now. That has its challenges for manufacturing, specifically within the tool industry. If we kind of look at current state, it has gone up a little bit, definitely nowhere near parity. And then economists are saying that it's forecasted to go back down. There's a lot of volatility to this, though, and we'll figure out what happens with the Canadian oil market because it does seem to be driven primarily off of that. Another thing that's going to drive this is the number of launches heading into the next few years. This is an automotive focused slide here, so we're looking at when do we expect shops to be busy. If we kind of back off 18 to 24 months from 2018, when do we expect tools to actually hit tool shops for those release years? So the next few years are going to be pretty busy. What I don't want you to take away from this is looking forward, there is no significant drop off like this. This is primarily new entries and redesigns. There will be a lot of minors throughout this process that does need mold and die tool makers to produce more equipment. So the question we asked here, going back to selecting a specific machine manufacturer, we did see quite the difference between mold and die shops. Looking at mold shops, you do see kind of a spike on service from supplier, speed and size of machine, also maintenance reliability. However, if you look at die shops, maintenance reliability jumps out as the top thing, followed by price and then CNC control. Kind of an interesting dynamic here. Can't explain it 100%, but the differences here are pretty clear. Die shops are a little more price sensitive around the machines they choose. They're a little more conscientious of maintenance reliability, not that mold shops aren't, and that the controller, for whatever reason, is more important. Now, if we look at the same question for selecting a specific controls manufacturer, we don't really see a whole lot of difference here. We do see a couple things around ease of use and service. Part of this could be around the workforce within these organizations around, okay, how are we going to keep our machines up and who's capable of actually working on them? And then if we look at kind of a mold die breakdown as far as utilization goes, die shops are planning to be busier throughout 2016. So like I mentioned previously, the end of 2015 and the early part of 2016 was pretty slow for a lot of shops. Like I said, this is an average. I mean, there were some companies here that were significantly below 66 or 86. However, there were also companies that were significantly higher than that. It really depends on the markets that you play in. Now, a quick summary of the stuff I just went through. Fanuc and Heidenheim represent significant brands within the controls markets, right around 52%. They are major players in US and Canada as it relates to the tooling industry. However, at 38%, captive machines are a large portion of the overall market. So, we collected information on about 1,300 machines for this study, and what we found was the average age of the machine varies depending on how large the facility is. What we've seen with some of the larger facilities that their machine replacement rates are primarily between 5 and 10 years, but it depends based on the function. And then smaller shops tend to replace their machines less frequently, but it also depends on what's going on or what specific work they've landed recently. These captive machines, they can be newer machines and they can be older machines as well. As we talked about with the various ratings, different controls brands have their strengths and weaknesses. Fanuc and Heidenheim are really going after that technology focus. Haas is looking at that ease of use focus. And then Siemens is really trying to find their niche primarily around capability and flexibility. And then lastly, we dove into some various segments, whether that was revenue range, Canadian versus US shops, mold versus die. We talked about which shops were going to be busier than other within the industry. Some of the key takeaways are mold shops are looking to invest more in machines than their die counterparts. However, die shops are saying they're going to be busier in 2016, and we'll see how that plays out here within the next couple months. So that's it right now. If you are a Hardware IQ member, there are an additional 30 plus slides of content. If you are interested, feel free to give me a call or email me at jmurphy@hardwareresults.com. I'd be more than happy to talk to you about that. And if you have any other questions, feel free to reach out to me as well. All right. Thank you.